Ooh. That's it. All right. Morning, everyone. Let's kick it off here. All right, after a bit of a dead cat bounce session on the S&P and the Nasdaq and everything, I know 1% of the Nasdaq doesn't seem like a dead catter, but after dropping 2% on Thursday, I think it could have been a little bit of a dead cat. We had nice GDP number on Friday. Continuing on the spate of earnings. In fact, we had some comments over the weekend out of some of the Fed members saying that they think there's some really, really strong data points coming, maybe adding a little bit of fuel to the fire, continuing to see just absolute all-out dollar strength versus the basket that's just continuing to decimate the commodity space, putting weight on that. You're still seeing short-term yields rise in the States. That whole theme is still intact. I think until that changes, then we'll expect to see more of the same in equity markets that we've seen over the recent time. This morning we didn't get any real follow-through out of Asia, kind of adding fuel to the theory of the dead cat bounce. You can see there, I mean, Hang Seng had a big correction, more specifically because of the heavy protests that they saw, kind of a fourth day of protests there, really intensifying yesterday and getting quite ugly. They're firing tear gas, and there was a whole story going on there. The market really sold off hard there today, over 2% down. That's happening because the people of Hong Kong don't want the Chinese to control their elections, which is exactly what's essentially looking like is going to happen now in the next election. So they're obviously protesting against that. The rest of Asia was more or less flat when you throw it in, mixed with Australia down, Nikkei up a bit, maybe on the weaker yen. But you can see there that Australia is down again, mining stocks down again. These things they just can't stick their head up above water for anything. So, and we continue to see the real estate companies under pressure in China as well. So same sort of theme that we've seen going on over the recent couple of months. Probably expect to see more of the same in our market again today. Okay, our chart of interest today is monetary stimulus projections, and that is probably the huge reason why we see this weakness in the yen, especially relative to the dollar. As you can see here, the dollar looking to come off the boil here, or the Fed looking to come off the boil here, while the BOJ is still going to be pumping into the yen. You see the yen sprinted about 10% to the downside over the past past 6 or 7 months, and that's probably going to continue. A lot of people actually even calling for record lows on the yen, or record 20 or 30-year lows on the yen sometime over the next 2 years. So all right, let's move on to corporate action today. Just noticed something on the terminal here. Impala Platinum raised to buy versus neutral at UBS. There's no real significant corporate action to speak of today. We do have ARI and MMI that are going ex-div today. ARI is $6, MMI is $8.50, and a 50-cent special, 85 cents and a 50-cent special, not $8.50. Sorry about that. All right. Moving on to market data, we've got some Spanish retail sales and CPI numbers this morning. We've got mortgage approvals out of the UK. In Europe, we've got economic confidence and consumer confidence numbers. And locally, we've got non-farm payrolls at 11:30. We've got CPI numbers out of Germany at 2. We've got personal income, personal spending, pending home sales, and Dallas Fed manufacturing later in the States today. It's going to be a data-heavy week. We're going to have the non-farm payrolls out of the U.S. on Friday, along with a hell of a lot of other very important data points. We also had have kind of a big thing going on right now in the Eurozone at the moment, and Europe's trying to kind of convince Germany to push through a stimulus package there and to really get things kicked off there in Europe. And Angela Merkel is, just bluntly against it at the moment. She doesn't change tack. That's a big point for what Eurozone wants to do going forward to really get things off the ground. A lot of people saying if they don't do that out of Germany, and they can't get Germany to really go through with that, then we're going to really have a sell-off coming soon because the markets are expecting something. So keep that in mind. All right, let's get into the maps. All right, first thing we're going to look at this morning, we're going to go back to a chart that we have shown over the past couple weeks, over the past week. We've shown it a few times. We're going to look back at the weekly U.S. dollar rand, and you can see there it's official because of where we closed on Friday. We have broken out properly now in the dollar here versus the rand. Look, it's not the only currency that's getting hammered against the dollar, but I think the rand's actually getting hammered against most everything. Bottom line is, much bigger target here. We're looking for a target probably all the way out to, I'd call it $12, $11.90, $12, somewhere in there. So keep that in mind. That's a very big structural move potentially out of the rand. If we do get that sort of a move, we do get that sort of a breakdown, then I would expect us to have some dramatic moves in our equity markets and different counters, and a real shift potentially between certain sectors in the market. If you look here, I'm going to also go back into the into the shorter term chart and the daily chart here. So we're looking at the 2-year daily here. 1139 was the top tick on the intraday, or just on I think from a closing basis. Let's shorten this up a little bit and let's see what the highest close was. That looks like the highest close is about 1132, which is very, very close to where we are right now. And the intraday high top tick you can see up there was at 1139. So I think we're going to need to see a move through 1132 on it. I think we're going to need to see this thing break down on the daily as well for us to really call this thing a proper breakout. But I think you really have to have some. You have to be exceptionally cautious with this after looking at the weekly chart as well. All right, let's look at same thing. Let's look at the weekly chart here on Impalas. Looking at a 5-year weekly here. Also, you can see here on the weekly, Impala also has been absolutely just beaten down and taken out lows as of last week's session. So in the weekly, the previous closing low was about 90. You can see there we dropped it very hard from that point of view. We closed at 85.05 on Friday. That is actually a new closing low, even if you look on the daily. So we'll go back on the daily to 2 years ago. And you can see there our lowest close, I believe, was at 86 and change. We closed below that. To me, this is really looking potentially scary. If we stay below this level, especially if we start to push away from it a little bit to the downside, this thing could get messy to the tune of some big numbers. I mean, we're talking about just absolute carnage in terms of the target here. It would be exceptionally lower. So just watch out for that this morning, or over the next couple of weeks, I should say. There could be some real pressure coming into these things. We talked about these platinum stocks a year ago. We were talking about these things that are probably going to end up being the next gold stocks, and the way our gold stocks have literally just kind of come down and melted down every single day, and guys sit there and try to pick the bottom. They just keep coming down, and it's starting to look like that's actually coming into to fruition here. All right, next one we're going to look at it also on the longer term chart here. We'll just have a look at, I'll go back into the 5-year daily here. I'll pull it forward. This is Lonmin. So Lonmin, same sort of thing, but hasn't quite dropped out the bottom yet. As you can see here, we're kind of really testing the lows in Lonmin. I'd like to see us, before you're able to really do anything, we're going to need some confirmation. So let's look at the same sort of thing. Let's look at that 5-year weekly as well. We're really kind of closing at all-time closing lows on the weekly. So we're going to have to see us kind of push lower. But if we get below, if we can get below 33 in Lonmin, I think it's ugly, and I think that we can really trade down significantly lower from there if we get below 33 in Lonmin. All right. Let's look at Brait. If you have a look at Bright here, we have an absolutely beautiful head and shoulder setup in Bright, perfectly symmetrical in terms of the neckline, right at 71 bucks, or call it 71 and change, about 71 and a half is the neckline. We closed at 71.42, so we're right on it. If you guys can't see the head and shoulder here, then you're blind, but I'll put it up for you anyway here. And we drop below. I'd like to see us kind of make a push down to 71, maybe a touch. If we can drop 71, especially, it would be good confirmation. And I think you can hammer this thing. It's probably got significant downside from there. I would say it's got downside to as much as 10 Rand from that target. All right, let's look at SA Breweries. We talked about this about 3 or 4 sessions ago, and the major support levels, and we talked about what happens if we come back into these. Probably a nice, reasonably safe play off of support, and we got literally exactly that. We came down and kissed support here on the intraday basis, and we reversed hard on Friday session. We're seeing this weakness in the Rand. It's going to be interesting to see what's going on, or what happens today out of Europe. But the bottom line is we came down and we touched support beautifully down here around 615, 612, where it was, somewhere in that little area, and reversed hard. I think if we get another test down there, it's probably a nice little level to nibble. Maybe just a small pullback today could also be a good little level to nibble, so keep that in mind. And the last one we're going to show today is MTN, which MTN also kind of reached its target. I mean, this thing made a bit of an ugly head and shoulder pattern here. If you kind of slant this out, I'm going to have to draw this one because this is not all that clear cut, but if you see what I'm looking at there, if you take the target from that to the downside, the target was about 135, which also lines up perfectly. 235, which also lines perfectly to this level here. We came down. We didn't quite touch it, but we got really close. I think we got within maybe 75, 80 cents. Either way, we more or less filled the gap here, and we more or less hit our target. We had a huge reversal in MTN toward the end of the day. In fact, it traded all the way to 242 right before the close, and I think that this thing's probably due to come up and maybe even retest resistance here sometime over the next few sessions. That's it for today, guys. Good luck out there.